Hello guys, welcome to Smart Money Trading course. Hope you all doing great. In this video, I'm going to cover imbalance. So what is imbalance? Imbalance is also called IPA, that is inefficient price action, or FVG, that is fair value gap. So what is imbalance? When huge orders are placed from the supply or demand zone, the price moves rapidly, leaving gaps or inefficiency. This is termed as imbalance. So I'm showing you the diagram. When the price moves like this, comes up, moves like this, comes up, moves like this, this is efficient price action, because the market comes down and moves up, but there is very less amount of imbalances or gaps or inefficiency in the market. This is termed as efficient price action, where the price doesn't leave much gap and moves in a rhythmic fashion. But what is inefficiency? When you could see that the price moves up, comes down, moves up, comes down, moves up, comes down, and suddenly a huge sell order comes in the market and the price moves rapidly down from this supply zone. So this is termed as inefficiency. This gap or this inefficiency in the market is called as imbalance. Same is the case for demand zone. When the price moves like this, comes down, moves like this, comes down, moves like this, comes down, this is generally an efficient way of moving in uptrend. And when the price moves like this and suddenly causes massive move towards the upside, this is generally inefficient way of moving, and this gap or this inefficiency is termed as imbalance. And now, how can you actually detect the imbalance in a candle? The zone between the wick or body of the previous and the next candle is called the inefficiency. So if I say that these are sell candles, here you can see one sell candle, here you can see another sell candle, and here you can see another sell candle. How could you actually detect the inefficiency? The area from this body or wick to this body or wick is called the inefficiency. So the actual inefficiency here is this zone. This is the zone of inefficiency. I'm showing you another example. If you see this candle here, and then you see this candle here, and there you see this candle here, and there is a wick here, there is another wick. So here you consider the wick. The zone between this wick to this wick is called the inefficiency. So when the price moves down, it actually doesn't move in an efficient way. What happens is that it falls rapidly. So the way to detect the inefficiency of a candle is the zone between this wick to this wick. Similar is the case for the buy candle. So the area between these two wick is actually inefficiency. So the zone between these two wick is actually the inefficiency. Now comes the next important topic, that is how to detect the proper order blocks using imbalance as a confluence. So I'm showing you the structure here. When you see the market moving like this, moving like this, moving like this, and simultaneously breaking the structures, and as you see this, you could see that the market clearly breaks this structure and simultaneously breaks this structure. You see here that there is an order block here. You see here there is another order block here. So how this imbalance helps in identifying the proper order blocks, I will be showing you from the live charts later. Now I am just explaining to you how imbalance helps in identifying the proper order block. Here you find one order block and here you find another order block. Here you see no imbalance, and if you see here there is huge amount of imbalance which causes this breakout structure, you generally target this order block. Since this imbalance is already mitigated, there is very low chance that the price comes back to this zone, but there is a high chance that the price comes back to this zone, mitigates this order block and then shoots up. So for most of the cases, what happens is that the price comes back to this zone, mitigating this order block and filling the imbalance here, and then shoots up. So this is a very important thing, and how the imbalance helps as a confluence. I will be going to the live charts and showing you a few examples how the imbalance acts as a confluence and how it actually helps in detecting the proper order block. There is also another point, that is the fair value gap, which works very well in Indian market as the market is open for few hours. As there is inefficiency, which I have already taught you, there is another type of inefficiency, and that is gaps in the market. You could see that sometimes what happens is that the market is moving like this, and suddenly what happens is that the next day the market opened like this and it shot up again. This happens mostly in Indian markets because the market gets closed and the order gets executed in few minutes before the market opens. So this is also the inefficiency in the market, and the market fill this inefficiency to this level, and still there is this level of inefficiency which is left to be filled. Similar is the case for downtrending market. Let's see that the price move like this, and suddenly what happens that the market opened here and then shot down. So this is the gap in the market, and there is a high probability that the market fills this gap, comes to this supply zone here, and then short down. Fills this gap here and then go down from this supply zone. This is FVG, that is fair value, this zone. So these are the types of imbalances. Moving on to the charts. Here you could see that the market creates a structure here. This is the high, this is the low, and suddenly what happens, this is another low. What happens is that the market breaks this high, and this high simultaneously, three highs, creating another low, and then breaks this high. Now you could clearly see that there are two order blocks. Here you could see a proper sell candle, and here you could see another proper sell candle, and you could clearly see that the market leaves no imbalances here. So the price moves in an efficient way, leaving no imbalance here. So if there are two order blocks like these, you generally target these order block because it causes breakout structure and there is imbalance. You could clearly see how from this week to this week, this is the area of imbalance. The next candle wick is here and the previous candle wick is here. So this is a clear area of imbalance, and the price will come to fill this imbalance and then shoot up. Next you could see there is a sell candle here, there is another sell candle here. But for this sell candle there is no imbalance. There is no imbalance, but for this sell candle there is a very small imbalance. You could clearly see from this wick to this wick, and the price comes down to fill this imbalance, mitigate this order block, and then again shoots up. What happens next? The order block here breaks this structure, comes down, again And again here you could see another order block here. This is a very valid order block here, and there is slight amount of imbalance here. The price comes back and then shoots up again. So this is imbalance on Supreme Industries. Now I will be showing you few other examples. This is the trade which I have already shared. The price consolidates here a bit, and then after this order block the price shoots up. There is huge amount of imbalance here, so there is a high probability that the price will come back, and the price came back, filled this imbalance. You could see that there is imbalance here. From this to this there is imbalance. From this to this there is imbalance. The price filled up to this level, so still there is imbalance here. The price filled back, again filled this imbalance, and then shot up. Now here you could see that there are two order blocks. This one is a valid order block, this one is a valid order block, but there is huge amount of imbalance here, so the price came back to fill this imbalance and then shot up. Same is for this stock. There is imbalance here. The price came back to fill this imbalance, and you could also see that there is slight amount of gap here, and the price comes back to mitigate this order block, and then the price shoots up again. But after it shot up, there is still imbalance, and the price came back to mitigate this order block, filling this imbalance, and then the stock is shooting up. Similarly, for this case, you could also see that there is imbalance here. Price came back, mitigating this order block, filling this imbalance, and then again shot up, and there is huge amount of imbalance here. The price filled this imbalance and then again shooting up. Same is for Suzlon here. The price after this order block broke this structure, then again broke this structure, but there is imbalance here. So you could identify this as order block. This as order block, but since there is imbalance below it, this is a much more valid order block, and you must target this order block. And now there is another important point in imbalance, and that is there is a general tendency of the market to retrace back and fill all the imbalance, but it does not mean that all imbalances will be filled. So what happens is that for most of the times the price moves like this, comes like this, create imbalance, and fill nearly 70 to 80% of the imbalance, and then shoots down. So it is a rule for most of the cases the imbalances are filled, but there are many cases where all the imbalances are not filled and the price shoots. And so as I have told you that all imbalances are not filled, you can clearly see that the market consolidates here for a bit, shoots down. There is an imbalance here. You could see there is an imbalance. It fills to this level. So still there is imbalance here, and there is a chance that this imbalance will be filled, but this is not filled yet. Then what happens is that the market breaks the structure. This is a clear break of structure to the downside. This was the previous break of structure to the downside. And what happens is that after this buy candle, the market causes break of structure, and there is a gap. There is a high chance that this gap is filled, and this is what happened here. The gap is filled and the market shoots down again, and you could see that the market taps to this order block. There is slight amount of imbalance. You could see from this week to this week there is slight amount of imbalance, and the market filled the imbalance and then shot down. And what happened next? I shared this trade with you that there is imbalance, slight amount of imbalance here, which is left to be filled. There is slight amount of gap here which is to be filled, and the price shot up, filled this imbalance, tapped this order block, and now it is moving down. Here I am showing you another trade that I've already shared. There is imbalance. The price came back, did not tap to our order block. It is very sad. I've shared this trade nearly for just for a few passes. The order block is not tapped. The imbalance is filled, so it is not ideal to target again this order block. Still, I'm sharing you the trade which I've already shared and show that how this imbalance is filled. Next, you could see this is Bajaj Auto. The market consolidates here for a bit and the market shot up, leaving this huge amount of gaps in the market. These gaps are to be filled and this is filled, but still there is imbalance in this candle and this got filled, so the movement of the market gets efficient and then the price shot up. I've already shared this trade with you. Now, there are many stocks where imbalance doesn't work much. Same is the case for Dalmia Bharat. A few asked me that why even there is no imbalance I took this trade and why it played out. And I said them that this stock I backtested for a while and I've seen that the imbalance doesn't work for this stock. So it is just a confluence and you must backtest it properly on the stock you trade before taking it as a useful confluence for your trading plan. So you could see that there is a valid order block here and the imbalance is not filled and the market shoots up, comes back to this order block, mitigating this order block, but there is no imbalance and still the trade works out. And now again when the price shot up, breaking this high, I have shared this trade with you and this is how it actually played out. So you can say that yes, imbalance is a confluence, but you must practice it properly on the stock or on the strategy that you trade and use it as a confluence.